On behalf of Bankers Weekly and the Elite Bankers Club, I extend a hearty welcome to our esteemed club members, our respected mentors, and a special welcome to all the distinguished banking leaders who are joined only for this session today. And to guide us through this very critical subject, we are immensely privileged to have with us a true luminary in this field and, of course, of the banking world also. So I request you to have your questions ready. After the presentation is over, you will get an opportunity to ask your questions. And now, without any further ado, it's my great honor to welcome Shri Hargovind Sachdev ji to begin this session. Sir, the virtual stage is yours now. Welcome.
For having spared your invaluable time on this Sunday morning and joined us. There were no currency notes, no forex, and people used to have precious metals and then some coins of gold, in return towards service charges, interest. And this is how the banking started. Banking started with that, and today banker is having almost the same role play towards this. They want us to strive hard, to take decisions based on a 360-degree view of the situation which might confront an asset when you fund it. And a lot of taxonomies RBI has issued recently, ESG taxonomy. It has been, a leader. They have created an economy of 30 trillion. Friend, ESG stands for environmental, social and governance compliances. Friend, now RBI is very particular to encourage sustainable finance. They permitted banks to raise green deposit, issue green bonds. Friends, research indicates that ESG focused banks may achieve promoting diversity in leadership, strengthening anti-corruption measures, which will result out of the association with borrower. Friends, compliance with ESG norms inculcates ethical banking, which is the real banking. Sustainable development must be the foundation of economic policy. We should not look for profit alone. Mahatma Gandhi used to travel in third class train compartments during the freedom struggle. And one day, when he was traveling on that wooden, platform inside his third class coupe, there was an old person being taken to some nearby hospital. So after 6 or 7 times he did it, Mahatma Gandhi ji stood up and put his hands, in a folded position before his mouth and collected the sputum, went to the washroom, cleaned his hands, threw the putum there and came back. Now this embarrassed the people who were accompanying that old man who was unwell, and then they made him walk, gave him some water, and the cough subsided. Friends, this we also think in small way around our surroundings to keep things clean and make this world a beautiful place to live. Friends, the money, it grows out of cultivating the nature. More we care about the surroundings, more we will be able, they implement those ideas, into their day-to-day life. And something which we do not want to eat should be left for others. Friends, only when the last tree is cut down, the last fish eaten, and the last stream is poisoned, we will realize that we cannot eat money. Because once we finish all these things, what will be left will be. So, friends, nature, if it is not taken care of, will not distinguish between the genuine high value real estate and the villages. It will, become angry and will, inundate norms. It's a framework to evaluate how a company manages risks and opportunities related to sustainability and ethical impact. Does to the company and what company does to the nature is the first pillar of ESG, that is the pillar E. And whether your labor practices are at par, they are honorable and dignified. ESG is important because ESG factors indicate potential risks and opportunities in an investment with values. ESG is important because it integrates to operational efficiencies, enhances reputation, and of course, you also attract talent, which joins you and then converts your dreams into realities. See the ESG compliance in 2006 to 11. We were there and we were interacting on various exposure to Siemens AG, which is the perhaps the largest corporate in world. At that time, it had a balance sheet size of 72 billion euros, which is size of most of the economies of small countries around the world. See, in India, if you give a loan of 650 million euros, which is 4,500 crores, people will send their cards, flowers, sweets, gifts, and then they will come and take you. Now, those trucks were carrying the raw material ordered by the factory for manufacturing the products. That machine had pre-fed information about the order placed and the quality. And I went again, and they still said it is a very long document and we will sign only electronically. I came back and then was laughed at, and then ultimately they said, okay, let the company give the document which they want to sign and we will approve it. They gave a two-page document on demand. We, Siemens AG, promised to pay 650 million euros at LIBOR, Euribor plus so much for value received. Next page it was thank you. This is all they gave with a resolution. Probably you should give negative marks in rating, charge them higher interest, and tell them that if they innovate a product which can be disposed of or which can be repaired and reused, the uh, pollution of air, water, and land is reduced within the factory. Their processes should be such that they should have a responsible waste disposal system. Friend, S pillar addresses a company's relationship with people and its impact on societies. We must see that the company, if we are proposing to finance it, then we must discuss whether they are paying fair wages. The corporate structure should be such that it should act in a transparent and accountable way. And the board of directors should have an equivalent and mandated number of independent directors who should be given full liberty to express their opinions during board meetings. The conduct of directors, friends, ESG factors are significant for companies seeking bank loans. Friends, companies seeking loans, strong environmental, social, and governance performance is significant. Effluent treatment plant. The old plant was dysfunctional. That should be done, at the time of sanction. Social issues such as labor disputes, impact productivity, and reputation should also be gone into. And weak governance, signals a high risk of fraud or mismanagement. So governance also should, imbibe some sort of a confidence from its labor, from its force, and then percolate it to you that they are the people who will perform. Banks are offering green loans and sustainability linked loans that provide financial incentives for achieving ESG targets. And polluting, fossil fuel companies is coming down. So this social organization has taken, and there is a class suit facing this bank. So now what is the reputation of that? Now the investors, and the shareholders are very nervous that their latest QIP of 25,000 crore was subscribed 4.5 times within one day. Adani Oil, Reliance Oil, and of course, the Coal India Limited, probably long term. Because bankers say we will not finance petrol and diesel driven cars anymore. You bring in your own equity and purchase them. Haldiram is more desirable than most of these food distributing companies, but then Haldiram has a limitation to grow because it can never be ESG compliant because its business model is such, as such, its valuation would remain low, aligning with their broader societal responsibilities. I went to Greece. They were indulging in non ethical practices, concentration risk was ignored, and banks failed. Once banks failed, the economy collapsed. Banks have a very crucial role in contributing to a more socially equitable economy. ESG is no longer a matter of ethics for banks. It's becoming a fundamental driver of risk management. How sustainable finance as a product is evolving. Friends, sustainable finance, there are two floors and there is one air conditioner of 2 ton, which is flooding the entire house with cool. Proper ventilation, proper light. The rooms, should be connected to each other in a way that privacy is sustained but air is shared. Friends, aligning the loan portfolio with ESG is becoming a challenge, but it is also an opportunity. And 80 lifts, and then there are about 20 eating joints. So they said ki we are generating lot of energy every day. So a lot of effort was put in to, and the carpets were changed. The carpets were absorbing a lot of air conditioning. Even the sofa sets with big cushions and all, who were absorbing a lot of air conditioning were changed. Curtains were removed, and of course, managing physical and transition risks associated with climate change across lending portfolios. Now, to transit to a company which is ESG compliant and which is not polluting the surroundings, they had to invest 10 crore. So, the cost of transitioning, because Germans, they will be selling units very cheap. Like you can get a glass making factory for 2 million euros. No, this looks very attractive from India, and a lot of people used to land up. See, there, those days, even though there was no corona, it was much before corona when I was there. But then the Indian managing director landed there. He invested 2 million in that unit and insisted that CEO should come every day and progress to all stakeholders. It should be right up to the branch level, branch, regional office, zonal office, then our head office. They should all start observing ESG guidelines in their day-to-day practice. Then only investors, customers, regulators, and communities, they will be happy and they will see your visibilities for longer. Otherwise, we have to wind up. Friends, we'll small time we'll spend on scope 1, scope 2, and scope 3 of emissions. Now, scope 2 emissions are indirect emissions, slightly difficult to control. Now, I'm sitting in Dwarka, New Delhi, and the power is coming here is from Dadri, which is a coal-fired, electric generating plant. Now, if I take electricity from green resources rather than from thermal resources, if they do it, then their product will be acceptable worldwide. They can export it because their energy, the carbon absorption, is not out of fossil fuels. They come in bus, which is driven by diesel. So they are part of the carbon creation. Your chairman comes in Mercedes, which is again driven by petrol or diesel. Reduced waste and lower energy consumption contributing to ultimate cost saving, giving you market advantage. Banks may operate without full ESG compliance in short term, but they're likely to encounter increasing challenges regarding risk, cost, regulation, reputation, and missed business opportunity in future if they don't comply with ESG. As such, integrating ESG principles is becoming essential for long-term success, resilience, and relevance in the evolving financial landscape. Friends, जिंदगी की असली उड़ान अभी बाकी है.
I'll just take 2 minutes to announce our future webinars. So friends, on 10th of August, we have a webinar on analysis of RBI monetary policy review statement. On 17th of August, we have a webinar on enhancing compliance culture and risk management in banks. And this session will be taken by Shri S.C. Kalia, former Executive Director, Union Bank of India.
So even the TV study should contain a sort of checks and balances or a list that this is how.
And wonderful session to know about things. Basically, is a new subject.
Thank you, sir. Thank you. Bhoi sir, please start your comments.
This is the issue that we have to take care. And probably we are not ignoring environment. So why I am telling that in the process of growth, probably growth, high rate of growth is desirable. Even for 7 to 8% growth, carbon emission will continue to be high. You can reduce lending to the say production of a diesel vehicle or a petrol vehicle or transport. One is environment, another is social, another is governance.
Whether they go for the market borrowing, NCDs, and whatever it is, but they'll need the NOC from me.
That you can invest up to 10% of your say non-SLR investment, alternative investment fund. They are meant for MSME and venture capital, infrastructure, all these things.
Even digital, sir. Data centers are creating a lot of.
And so now we move over to the question answer session. Madam Erika P. Power, please you can ask your question. Unmute yourself and ask your question. But in any case, many people registered and many members also attended. So on behalf of Bankers Weekly and Elite Bankers Club,